Well, everybody, happy Monday. It is April 8th, 2024, and this is the Option Pit Ticker Highlight Show. Reminder, we're here with you every Monday at 9:30 Eastern Time, 8:30 Central, 7:30 Mountain, 6:30 Pacific Time. If you live in Hawaii, do the math. It is good to see everybody. Each week, we're going to break down a stock from three different angles: the fundamental, the technical, and the volatility level. I will start with the fundamentals, then we'll dig into the text with Leisha, and Andrew will follow up with volatility. So for those who don't know us, I am Mark Sebastian. I am your only option, and I am joined by Leisha J. Leslie, the Queen of the Candles, the Duchess of Doge, and of course the Viking of Volatility, the Andrew T. Giovinazzi. Welcome, guys. Thank you for being here. This week, we are looking at Dell. Dell is an interesting one because, what makes this one different from an HPQ or any computer maker? And the answer is not so clear. They are, when you look at what they do, what they're getting into more is on the consulting side. They're trying to step in where IBM kind of failed. What's really been IBM's downfall. So where IBM used to be, we're going to consult with you, and then we're going to give you the hardware that you need to execute your tech plan. Well, the dummies at IBM decided to sell their hardware business. And so they can't give you the computers that you want and the different pieces. Dell is trying to do the same thing for the AI generation. Go into companies, consult, tell them what they need to use for AI, things like that, but then also provide them the hardware, the computers, the stuff that the infrastructure solutions that teams that people need in companies. So they're basically trying to pull an IBM, and doing this is what made IBM wildly successful. The IBM PC was a huge success because IBM would go into your company and provide you a computer. After they said, this is the computer you need. And people listened. And then they decided to sell their server business and their personal computing business. How's that gone for IBM since they did that? Well, Dell is hoping not to make the same mistake, doing the consulting and hardware. One of the things that I think is unique about them is that they're able to run specials and run pricing based off their own inventory. So they've got a good inventory management system as well. From a earnings standpoint, 6 months ago, this PE was really attractive. Now it's up to 30. Pretty aggressive. It's got a price to sales now. The price to sales used to be kind of below 1. It's now above 1. Pays a nice dividend. They got plenty of cash. They make good money. $4.37 a share is not bad, but it definitely is a little, I liked it a lot more before their last earnings when it went from 92 to 125. But the reason for that jump is that they're making this transition. They're one of I believe what really got them going on the third was they are going to be the keynote speaker at an upcoming NVIDIA conference, talking about what I just discussed and what the value is. And that, just getting mentioned in the same sentence as NVIDIA, that's like, that's like getting a blessing from God, essentially, in the corporate computing AI world. And they got that blessing, and the stock is now above where it was. Well, it closed on Friday above its high from its post earnings, and is now, off a little bit today. But generally speaking, if they can execute this plan and really get into the consulting business and can and do have a good relationship with the AI chip makers, where they're at the front of the line of being able to get the hardware to deliver to corporations, it's going to be a huge win for Dell. They will make that valuation jump. And, right now it's worth about $94 billion. IBM's about 173. So if you can see them taking that big consulting role and taking market share away from an IBM, then now you're talking about a doubling of the company over the next 12 to 24 months. And
what did he take it private for, Dell?
He didn't, because he did not think that he took the same reason why the Nordstrom family is thinking about it doing. They don't think that they can make the turnarounds and the changes they want to make in a public setting, right? Being public.
Didn't he take it private for like $25 billion?
Yeah. Oh, he got a steal. He got a steal. It helped that he still owned 40%, 30 or 40% of the company.
Yes, it did. Because I remember he traded that takeover for a little while. It was kind of fun, like, I don't know, 6 years ago or 7 years ago or something.
But going private can be really valuable especially when it's done by people that are not only, like, going private by a private equity is different than when the founding family wants to take it back private. And so what I would say is, like, looking at Dell, you can see what happened. He took it private, fixed it, and then took it back public. I think you could see the same thing if Nordstrom the Nordstrom family is talking about seriously taking it back private. If they're able to do that, I think they will eventually go public again, and I think they're going to be very happy with the net result. When a stakeholder is an equity holder and takes it private, that's really when there's value, I believe. M is a different story. So someone said M is also a target of going private. M is a private equity group that wants to take them. Private equity is never interested in the long term, typically, when they take things private. What they're thinking about is, as soon as they take it private, they're thinking about their exit. So I would never buy I don't know, it's not really an IPO, a reissue of a formerly public company that was taken private. All right. What if Elon takes X back public? That would be a different story, right? He bought it himself, right? Not as part of, what are some of the big ones? Apollo, what was Mitt Romney's group?
Bain
Capital. Yeah, Bain Capital. Firms like that. So
I didn't mean to sidetrack us. I was just,
No, I know.
He's done well riding this back up.
KKR is a good one. Thank you. So I think so the point being is that you've got to, when a firm goes private and then goes public, you got to be very wary of who and what was done behind the closed doors. Did they shore it up, or did they strip it down and load it up with debt? And Dell did not have that issue.
Right.
And JWN will not have that issue if they do that. X does not have that issue if that did happen. So that is my general kind of thesis. But if you believe in the thesis, then you want to own that I just laid out. You want to own Dell long term. If you do not, then this is not the stock for you. And that is my take on Dell from a fundamentally right now. It's a little overvalued or fully valued is what I would say. But if you believe in their pitch and you believe in their plan, then it's going to be worth $150 billion. That's my take.
Moving on to the charts, we can see Dell has been in a just a steady uptrend for the last year, gapping on earnings, on good news earnings, which the last time it did, creating and holding that gap. I would say I'm bullish also with Mark just by the charts. Today's low held the support level on my new mini pitchfork. But so Andrew, use that as your low. Today's low is your support. These tops are resistance, but this pattern here looks to me like bull flagging. And you can see on the weekly, we have a nice bullish candle on the weekly. We can put these previous highs that's busted through as support. In the future, it looks like 139, 140 is in the cards. Pretty soon, I would say, and then higher from there. That's what I say, Andrew.
So it's kind of do you think so? We're kind of in a little mid area here.
Yes, I think it's flagging here to ready to take that next high. And like I say, today's low held my support. I would use that as your support level, 126.40-ish.
Okay.
And then the previous highs here will be some resistance. Today may be a buying opportunity.
126.40. All right,
yep.
All right. Because I had to put those levels in to do an adjustment or a close or something.
Right.
All righty.
You want it to break out of this over these highs, and it should move to 140.
Okay, so 140. So that would be. Let's see what. Okay. Well, I mean, it is a tech company, and they did say AI. So
there is that.
That's all you need.
But they're kind of like the real use case, right? If they're able to turn this into a real profitable venture, then that is really the key to this whole thing. Now, if Dell does a 180 in 18 months or 12 months, then we have a problem on our hands.
So we have so there is some, I would say, some interesting earnings or vol stuff here. I will share my screen, and if I can actually hit the right button. So a couple of things. So if the earnings are on the 30th of May, so if we look at 1 year, so it could be a lead candidate. I can look at some of those numbers, but right now we just had earnings came out in March 2 months ago. It's only 1 month in, and you've got some pretty pricey vol here, don't you? For the April, wouldn't you say, Mark?
Yes.
And it's not earnings cycle vol. The May is earnings cycle vol, but the April is not, which kind of is tailor-made for a calendar. So, trading around earnings, sometimes a trade can be, you can run a chainsaw and you can do a keyboard. Oh, you guys saw the chainsaw video? Dang tree hung on the stump. It was kind of annoying. Anyway, so one way to trade earnings, and here's a little tip if you're interested, is volatility in the earnings back month, where the date of the options is after the earnings date, tends to stay pretty firm because nobody really is a huge natural seller of those options prior to earnings. But when you get the front month to jump, when you have this kind of hyperactivity, you can work into a calendar and you're getting a much better price for the short-term options than you normally would, which converts to a relatively inexpensive calendar. And so that's what I think the trade would be. And then we could run Leisha's stop as a place to add a put if things kind of go south. So what I would do here is, so we've got volatility here. So earnings are May 30th, right?
Mm-hmm.
So, I mean, you can almost buy the June contract. So the June, let's say the 140 are $8, but I think that still feels a little high. It's 52 vol, but we can sell like this April, and all the vols here are like in the mid 50s. So that considering these are all like $10 out of the money, this is relatively, these are relatively expensive. I don't think we have to go all the way to June though. I think we just go to the regular May cycle. Now you can buy the 140s here for $340 and just sell like the April 140s for, let's say, $1.20. So you're into the calendar for about $2.20. Relatively inexpensive calendar. The only thing I might slightly do different is try to be a little longer. But I think from a pricing point of view, that calendar is relatively cheap. These options for $1.40 that expire in 2 weeks are $12 out of the money at a 52 volatility. These things should totally evaporate. And if we get to 140, then we don't have any problems. So what I'd say is the whole idea is you want to sell these relatively expensive options. And now you're holding on to our standard May options at a 44 vol and getting us in here. And I'd almost consider like the diagonal calendar where I would sell the April 140s and buy the May 145s. That's a slightly more difficult trade to manage. So I'll just go with like the straight calendar. But you're basically, the whole idea is you want to be able to sell this 52 vol here. That's the bottom line. Any way you can do it. So buying the back month option kind of gets us to that, possibly the 140 level. So I'm just putting my calendars based on sort of where Leisha is talking, her levels. And then if you need a put, if we break down to 126, buy I say we buy 2 calendars and then buy, let's say like a 120 put if necessary, but only if we really back up far enough that it matters. So that's kind of what I would do there, Mark.
I like it. I think that makes sense. Now we've got a nice little down day today. I would want to see a green day before I jump in, but a simple play would just be like a little call spread in May. You could do the May 130. You're still getting over $1 for the 155 calls. So if I could do the May, the May 130, 155 call spread is just a little over $5. That, to me, that's a really nice risk reward and a simple way of expressing a long opinion. So you buy the May 130 call for $6.70, sell the May 155 call sell the May 155 call at $1.20. You belong the 25-point vertical for $5.50.
So that's May. What's your number? What are your
130,
strikes?
155.
For how much?
550.
All right. And then this calendar
550,
here.
550.
Okay, 550. And this calendar here is 140. So I'm you probably do 340 over 115. So that's what, 225 for the
That's
calendar.
not bad. No, yeah, that's.
So you're spending about the same money. Now here, what I would do is, okay, now if you want to manage your calendar, like, okay, so if Dell drops below at what did she say? 126.40. Okay, just buy one put, buy one Dell May 17. I like when the 115 put, because what you're really looking for is like if you have any kind of real meltdown. So I think a May 115 put would be all right. Because the calls you sold in the calendars, if those evaporate, that will easily pay for whatever that put is. So you're going to the short calls from the calendars will pay for a put that you might buy. So then you're running onto the strangle. If you have another lift, you can go sell another call if you want to. You could resell, one or two times against your 140s, depending on, what happens. So that way you'll finance that contract. And there we go.
All right. Well,
I can give this to Christian here. There's the.
Yeah. Well, everybody, we'll get the trade out to all of our live members. You can join us here every Monday at 9:30 Eastern time, or 10:30 Eastern time, excuse me. I am Mark Sebastian, your only option. So for Andrew T. Giovinazzi, the vicar of volatility, I am Mark and Leisha J. Leslie, Queen of the Candles. We hope you have a wonderful day and a wonderful trading week. We'll see you soon.